This is Craig Haugard with your Financial Issues Egg update for April 23rd. Well, nearby corn futures were locked up the 25-cent limit as the combination of weather issues in the U.S. and Brazil, coupled with the seasonal timeframe rallies that we frequently see into the spring and early summer months, had buyers coming into the market with both fists yesterday. New crop was stronger as well, with the December futures closing 16 3/4 cents higher for the day. Due to recent position limit changes, managed money is now allowed nearly double the position limits that they could have in the past. And with ag commodities setting fresh contract highs almost daily, we continue to see money flow into these markets. Today we're going to be operating under expanded limits of 40 cents per bushel in the corn market. Soybeans were pulled higher by limit-up corn prices as we saw funds buy 26,000 contracts during yesterday's session. Soybeans are an interesting story to contemplate. We have an impossibly tight carryout situation, and the only way to really make that better is to ration demand. Currently, U.S. crush is positive, livestock margins are positive, and China has shipped almost all of their commitments. So the only way to ration demand at this point is to either push crush and or livestock feeding into a negative margin situation. To accomplish that, we're going to need to push the market higher than the current price level. With the newly enlarged position limits for managed money, this could continue to be a runaway for a bit, but be careful because when this turns and all that managed money is running for the exit, it could get bloody on the downside as well. Wheat had a wild day as we saw both the nearby Chicago and Kansas City futures trade limit up, with Minneapolis wheat falling just a tick short of being up the limit. All three exchanges eventually closed off of their highs, but Chicago was up 37 cents for the day, Kansas City 36 3/4 better, while Minneapolis closed 30 cents higher. We didn't have much in the way of news yesterday, but what we did have was bullish. The weekly export sales report came in at 8.8 million bushels. That was above the top end of trade expectations. Cotton futures were marginally lower yesterday. At the close, we had July futures down 18 points, settling at 86.05. Livestock futures were lower straight across the board. At the close, June live cattle futures were $1.40 lower, while May feeder cattle were down $2.57.5. Lean hog futures were under pressure as well, with the June futures finishing down 97.5 cents for the day. Class 3 milk futures continued their retreat. The March milk production report was released and it was bearish in comparison to expectations. Total U.S. milk production for the month showed an increase of 1.8% versus the expected 1% increase. In addition to the higher than expected production for March, February milk production was revised higher as well. It was adjusted upwards by 36 million pounds. At the close, May futures were down 48 points, settling at 18.68. Meat cutout values were all higher yesterday. Choice box beef was $1.85 stronger, closing at $282.31. Select boxes were up $1.81 as they settled at $273.69. And pork carcass cutout values were stronger as well, finishing the day $1.06 higher, settling at $114.70 per hundredweight. This has been Craig Haugard with your Financial Issues Egg update. We'll be right back with more financial issues after this.